Hello everyone, the Chart Guys have been working on an introductory technical analysis course for quite some time now, and after surveying hundreds of traders with what would be the most sought after information regarding technical analysis, we came up with this course, When to Enter and Exit. It covers over 5 hours of the basics on when to enter and exit, and we feel after watching this course it will help build a foundation of technical analysis knowledge which will eliminate a lot of the uncertainty in the world of trading stocks. So the course outline, we go over the psychology of trading, establishing a game plan, the different indicators we use to signal a bullish and bearish entry, how to recognize support and resistance levels, poor entries, where traders make mistakes, exit targets, how do you know where to sell your trade, where to place stop losses, that's very important, minimizing losses is what keeps you in the game long term, my personal preparations, how I go about getting ready for each trading day, and then piecing it all together, utilizing all the information we just learned and how to apply that in the real world for making successful, profitable trades. As a bonus, we also include a lot of information on finding entries and exits utilizing patterns, and you can find these patterns on every time frame on pretty much any stock and commodity trading, and certainly being able to recognize those patterns can give you an edge as well. So we hope you will check this out. Again, it's an introductory level course. So if you are new to technical analysis and trying to get a firm grasp on things and feeling a little bit overwhelmed, then this course is for you. I hope you check it out. Appreciate you watching. Looking at CMG SKX NKE and TWTR on the daily and weekly time frames. So an inside candlestick on CMG, we're still battling around this 200-day moving average. That level is 413.45, and the upper Bollinger Band acting as support. The low of the day bouncing off that level. I personally took some calls, some weekly calls off of that upper Bollinger Band support. Certainly took a long time for that bounce to play out, but by the end of the day, it did see a couple dollars of upside. So it's an inside candlestick, which means we watch the range of today compared to tomorrow. And if we get a break of 418.32, it's a bull break. And if we get a break of 410.35, it's a bear break. This shows us that the range is constricting with lower highs and higher lows if you were to zoom in on the hourly time frame. And we know a break is imminent. The upper Bollinger Band is going to be important. We have to update that level at the open. If it's a bear break, we're looking down at 408.20 and then towards filling the gap. And if it's a bull break, 420.23 will be the next resistance. And that would be a very significant development because the weekly chart, the bulls want to see a strong close above 419.30 ideally to break that lower high pattern, get a higher low, higher high, and try and change this longer term trend. So we are keeping a close eye on CMG here for this month because of this trend change possibly in the works. And we would be looking for a move back up towards the upper $400 range if we get a strong close this week above, ideally above 419.30. SKX still a little bit of back and forth, red to green. No clear trend here. It's a bit of a weak bounce after a significant pullback following a significant breakout. So a lower high is likely to be set, in my opinion. When you have a breakout, oftentimes you reach that equilibrium where you have your low, lower high, higher low. So now we're looking for a lower high to be set. The upper Bollinger Band resistance is dropping down. It's at 26.15, just below the 200-day moving average resistance. I like those levels as a target for a bearish entry if we were to see a move up to those levels, but we did close near the low of the day. So support is down at 24.84 and 24.68. Weekly time frame, seeing those upper wicks of profit taking the past 2 weeks. No real follow through for the bulls at this point. So certainly not building confidence over the past couple of weeks. And we can see that with this little weak bounce attempt. And there's not much strength and follow through there at this point. NKE continues to consolidate, and we're closing at the low of the day again, just like yesterday, so that indicates further downside is likely. I'm looking at support of 52.44, and then we're looking at this gap to fill at 51.33. So we lost the 100-day moving average support on a back test. Weakness here as the SPY and the S&P 500 closed at the high of the day. Opposite scenario for NKE here. Weekly time frame looking to back test the middle Bollinger Band, 52.34. We can be scouting for a bullish short-term bounce off of 52.34, that weekly middle Bollinger Band. I would expect it to hold as support on the first back test after 4 rejections previously from that level. But overall, keeping our eye on this gap and looking for the bears to fill that sometime in the somewhat near-term future, I would say. But keeping in mind that we are still seeing higher lows and higher highs on this daily time frame, and as long as we form a higher low compared to 50.70, the bulls maintain that pattern, and that's 4% to the downside right now. So still plenty of room to maintain the strong uptrend on the daily time frame, but we know the weekly time frame very clearly a longer term downtrend. And last, we've got Twitter. This looks like normal healthy consolidation at this point. We are still rejecting from the 200-day moving average resistance for the third day in a row. That level is 1756, but it does appear to me that after this very strong bull break of 5 days, that we're going to see some continuation to the upside to fill this gap. That gap is at 1787, so looking for, ideally for this low of today, 1717, to hold as support, and for the bulls to see a nice strong move, get back over that 200-day moving average, close above it, and look to fill that gap. And after that gap fill, that's when we're going to be scouting some bearish entries, because I like the weekly resistance, that middle Bollinger Band. We're still struggling at the 50-week moving average resistance of 1748. So how we react to this 200-day moving average the next 2 trading days to end this week is going to be very important, because if we can't get over that level, we are going to close this week with a weekly candlestick. That 50-week level is 1748. And that 200-day moving average is 1756. Those are the 2 key resistance levels to be watching on 2 different time frames for Twitter. 1717 support. As long as we don't see an increase in bear volume, normal healthy consolidation right now after that bull breakout last week. So that's what we're looking at in the short term. CMG is going to be a nice trading opportunity. The volume and volatility here has far exceeded the other names in terms of trading opportunity. NKE still a clear bear direction with that close at the low of the day. See how much further downside we get. And Twitter potentially looking for the bulls to head back up and see a close above 1756 before the end of this week to end the week on a fairly strong note. I appreciate you watching. We'll check back in tomorrow. Have a great night.